but I mean, those who came were great, and they appreciated the platform of LinkedIn Spaces, but the attendance was low. And then Tuesday, you're right, we do pipe directly to our own YouTube channel for Not Crypto Bros. But I didn't change the title up here. That's hilarious. I'll change that when with the recording. I'll update that. But no, with on Tuesday it was fine. It would just it had lost momentum because we went to the audio space on Saturday, and then I think two of the guys didn't invite anybody out. And honestly, I think people have had FTX fatigue because we mentioned we were talking about FTX, and it was the middle of the day, and I think people were like, I've had some of these headlines, and I think I need the dust to settle a little bit before these three knuckleheads talk. But you paid close attention, so I mean, we're here to talk about FTX. So why don't you give me your overview of like where this thing came from, and then I do want to talk about these CBDCs a little bit. So talk to me in the broadest strokes of like recap how FTX got here.
So I think the biggest kind of clinching event for FTX was Sam Bankman-Fried publishing his paper about what potential regulation for crypto should look like. He did this about 2 weeks ago. And
I haven't even heard this. This is all new to me. What are you saying? Like, he wrote a paper about regulation?
Yeah, he came out with a paper, a memo to the U.S. government on what crypto regulation should look like in the U.S. Published this without feedback from anyone else in the crypto space, and they were very not crypto native or crypto friendly kind of regulations. They were very more TradFi regulation looking.
Really?
And so that very much upset CZ over at Binance and other kind of big crypto names, but CZ is the important one to remember here. And Binance, so CZ is the CEO of Binance Global.
Yeah.
And so they had a $500 million investment in FTT tokens, which is the native token of FTX.
Yeah.
And so a week ago, or just under a week ago, probably, they announced that, hey, we're going to liquidate our FTT holdings because we don't like how they conducted business.
Okay.
And that set off the hailstorm of everyone trying to withdraw from FTX and shorting FTT.
Interesting. Okay.
And the reason why that was so bad for FTX is that a huge percentage of their collateralization was in FTT tokens. So in order to pay withdrawals, they had to sell FTT, which caused the price to drop. And they were Alameda Research, which is their trading arm, had taken loans against the value of their FTT.
So that's where it starts to get over leveraged.
They were over leveraged.
Massive.
And so this Binance did this, caused a hailstorm. FTX was over leveraged, and so started being called on their loans as people were trying to withdraw, and they didn't have enough money because FTT just kept dropping and dropping and dropping.
Yeah. So sorry, my screen slowed down. I was checking us on YouTube, and I was able to forgive me for my rude mistake of messing up that title. So this is the first I had heard about the correlation to the regulation paper, and I'm not clear in your estimate, why would this bother CZ or Binance at all? Why were they bothered, or why did this trigger them?
I think because CZ is trying to influence crypto regulation throughout the world. He's trying to position Binance as that global superpower in terms of crypto. And so he wanted to influence that the regulation within the US. And there had been, at least from my understanding, somewhat of a cordial working between a lot of different members of the crypto space in terms of working towards regulation. So Justin Sun and all of them were all supposedly working together. And so Sam Bankman-Fried doing this really upset or kind of disturbed the balance and respect
Well,
that was there.
and I thought FTX and Sam Bankman-Fried, I thought these were all very tight people. I thought the board of FTX was full of or had a handful of regulators or regulator friendly individuals on their board. And so I thought they were being positioned as kind of the darling of crypto regulation.
They
Um,
are, and they were.
Interesting. So it was literally this paper. So this paper he issued, was it just against the stream of what he had been signaling or messaging before? Where it was kind of like he was making noises like he wasn't going to live up to his position in the market as being regulator friendly, or
No, so he was very pro regulation, and it was
oh.
heavy regulation. So it was very pro heavy regulation, more tradfi type regulation.
And
And
so CZ stepped in because CZ's been trying to influence regulation, but he's been trying to influence it to be more DeFi friendly than regulator friendly.
exactly.
Interesting. Okay. And so what's your take on, have you heard like some of these conspiracies that like um that how Binance, that this is kind of a pissing match between Binance CZ and Sam Bankman-Fried, and there was some slight or some strategy that Sam Bankman-Fried had done a few months back with the Three Arrows collapse that had, I don't know, was an affront of some kind to CZ over at Binance, and this was kind of a retaliatory action, or you don't buy into any of that? They just
I,
wanted to take
I,
FTX down.
I think, I mean, there's possible that it was retaliation, but I think it's more retaliation for the paper than it is around Three Arrows Capital. Um,
Really?
yeah, I think Three Arrows Capital is too far. I think the paper is closer and would kind of, and I think it was somewhat cited in CZ's comments of why they were withdrawing their $500 million from Binance, from FTX. Um, in one of the comments that CZ made, he cited the paper. And
Oh, he did. I didn't catch this.
yeah, so he cited the paper.
Oh, interesting. Now, so others I have heard, I heard another hypothesis, and that was that regulators were seeing SBF. SBF was becoming very, very visible, more and more visible, but it was obvious to everyone in the know that FTX was over leveraged and its subsidiaries were over leveraged. And meanwhile, he's making these noises. He's very visible, but it's obvious that he's done Ponzi like activities, taking out depositors' money and using that to cover losses for Alameda. And so CZ came in and basically was saying, listen, come clean, get your books right, or we're going to do something. And when that didn't happen, CZ made noises like he was going to, tried to sell their FTT token. And that was like a move of integrity. We couldn't do business with these guys. They saw the prices drop. And then they're like, well, we've got to make noises like we're going to purchase this thing to shore up confidence in it so that it doesn't completely tank. And then withdrew their bid. The framing I'm hearing is that every step there was engineered to literally expose and take down the business practices of FTX, not just necessarily retaliation. So do you think there's some?
Absolutely.
Oh, you think so?
Absolutely.
Really?
CZ knew what he was doing when he was pulling out that $500 million.
Really?
I'm certain. CZ is a smart man.
He is, yeah.
He's a very
Yeah.
smart man, and he knew that, especially in the market in the state that it's in,
Yeah.
that he was going to cause a bank run, and he was going to put them in a situation that was going to put FTX under.
Now, this raises a broader question to me, and for those who pop in or out or whatever may or may not see this later, Austin tends to have his hand in a lot of different circles and a lot of different pies, and so your view here is very welcome. From a broader question, is the crypto market that poorly managed that anyone, if there was an attempt, they're over leveraged and they're screwed? Like, is this just a standard practice, or was FTX that extended?
I think there are other players that are likely overextended. I don't think everyone in the crypto space is overextended. Crypto.com is probably one that I'm keeping an eye on to see what the news is like. And they definitely had a big scare the other day, and
Like
they
what?
paused withdrawals for
Oh,
on certain tokens on certain chains, and they're one that I'm keeping my eye on. They haven't been around as long. They spent a lot of money last year in the bull market, and when they released their proof of reserves, 20% of it was in Shiba Inu. So
what? Of crypto.com?
yeah, 20% of their proof of reserves was in Shiba Inu.
Stop it.
Yeah,
I-
that was my reaction. That was my reaction, and they felt okay with publishing that. Like, they don't see a problem. Like, at
like,
least
no one was twisting their arm to reveal their books. Like,
I mean, everyone was calling out exchange. There are a bunch of people on Twitter calling out exchanges to release proof of reserves after
yeah.
the FTX debacle. But
I had not, bro. I had not heard that 20% of their proof of reserves was Shiba Inu.
yeah,
How long ago was this?
less than a week ago. Less than a week ago. Like, I think it
What?
was just before the weekend, Thursday or Friday last week.
So like the fallout from that's not even done, right?
No,
You you
no,
said there was a little bit of a scare, but it doesn't seem like that news headline has taken.
no, and there was other things over the weekend that caught people's eye. Like, they deposited like $325,000 into Gate.io and then pulled out 285,000, but left some money there. So there was concern. There's some concern about Gate.io, like whether Gate.io and Crypto.com are like covering each other's books a little bit for these proof of reserves um, studies that
So
everyone's going under.
So, when I say that I have, when I posed my question before about being a broader question of the crypto market, you know, a major, we know a major feature of transparency in ledgers, and and transparency in banking, kind of just the knowledge puts the power to the people, where the people can call out weird behavior like 20% of SHIB as proof of reserves. And, like whatever that's supposed to mean for crypto.com, that's nuts. And so my question, and I'll ask it, I guess I'll ask the same question again, but like from your perspective of the broader market, DeFi's feature of being completely transparent on the books lets us see that maybe this company is helping that company shore up its reserves in this window. And then they move that money, heck, a week or two later, and it's helping this company kind of balance off its books. Are we seeing, because of the gift of the transparency of the ledger system, are we seeing that this is just how banking happens, period? Like, is this normal for finance?
It's possible. I think there's definitely a possibility there that people, like, this is truly how banking works. And
And we're just able to see how naked it is.
Yeah, and I think because crypto has a lot more volatility,
Yeah.
and there's more risk inherent in it. You can kind of like you can see the house of cards fall down easier
Yeah.
and more quickly in this sense. It's in some way it's kind of like you could think of this as the 2008 mortgage and bank crisis in the US could be
Yeah.
the same. Could be crypto's version of it, where the cards that were really over leveraged are starting to fall and kind of show themselves, just like they did in 2008.
And well, and the House of Cards revealed itself, and that I know the 2008. I know this market is being compared to 2008 quite a bit, and it feels a little different, and I don't know why I feel that way, but like so this leads to a question about what we were talking about just before. I don't know if we talked about this online or not. No, this is before we went online about the US CBDC. You said that the New York Fed Reserve just announced that they were going live with testing their CBDC like today, and I wish I could pull that article up and see what
I'll
was
see
going
if
on
I
with that.
can
But
find it. I
yeah,
had it. I was looking at it earlier.
yeah. So I'd like to know, like, obviously, this is driving regulation harder, um,
Absolutely.
and that's going to be
Um,
the net result. But public
Absolutely.
perception. So you know that Jarrett from the Not Crypto Bro show, he is a Bitcoin maxi, and we talk. He and I talk quite often about. Well, we've talked around this, but I'll ask you directly. When the public sees these sorts of things and they don't want to be taken advantage of, and it obviously all this makes crypto look even less reliable. Do you think that there will be um, an over attention to US CBDCs as an alternate to Bitcoin and cryptocurrency? Meaning, will attention deflate from crypto because they feel like they've got crypto in the form of a digital currency?
I don't think so.
Really?
I think CBDCs will be almost cement people's feeling of security in crypto. Um,
Really?
yeah, because one of the biggest fears that happened during the FTX crisis, other than funds being locked up and other centralized exchanges collapsing, was tether depegging,
Okay.
because
Yeah.
FTX was selling their tether constantly. They managed to depeg tether by 3% at one point.
Interesting.
They were
Okay.
attempting to sell tether and short tether to try and make up for their shortfall.
So wait. Okay, that sentence is loaded, and I think people need to hear that again. You're saying that they were holding reserves of U.S. Tether. They were seeing their shortfall was getting extreme. They were trading basically underpriced. They were selling their tether for less than it was worth. So if tether's supposed to be worth $1, they might be selling for 97 cents, large chunks of it, 96 cents. And you're saying they drove that down for temporarily by 3%, but they were at the same time shorting tether to try to pull in, what is that called? A butterfly? Isn't that called like an options butterfly or something like
Yeah,
that?
they were
That's nuts.
yeah, and so stable coins have always been one of the biggest concerns for most of crypto in terms of altcoins. Um, how to hold cash in crypto is really hard because stable coins are not. There was no way to really guarantee that a stable coin would hold peg. You didn't know. You got USDC,
Interesting.
that was like they were trying to become a bank, so they were trying to be all protected, but something could have happened. USDT was at one point backed by commercial loans, so
Yeah.
there was always worries about them. And so BUSD was like, okay, it's kind of controlled by Binance. It seemed to be backed one by the dollar, but still some concerns. So, and you couldn't use BUSD on most chains. You could only use it on Binance chain, really. So not having a stable coin to hold as the dollar in a time of the recession when Bitcoin's dropping, ETH's dropping, everything's dropping was a big concern. So CBDCs, in that sense, make it easier to have a crypto hedge, a crypto dollar hedge when the rest of the market's falling.
So, so this is interesting. I had not thought about this. So my concern has been that retail traders who have been dabbling with SHIB and Doge, and they're getting fatigued at just the volatility. And the U.S. government launches the U.S. CBDC, and suddenly there's kind of this relief of not having to keep up with the crypto Joneses. So I'm just going to grab my CBDC, but it's pegged. It is the US dollar. So there's no pizzazz and there's nothing really to earn. It's just like holding dollars. So that's deceived. But it sounds like you're proposing a scenario where this is good for the crypto ecosystem because we get rid of USDC, USDT, BNB or whatever Binance's
BUSD,
BUSD.
DAI, Magic Internet Money. You get rid of all of these stable coins that have
Interesting.
questionable backing or
Yeah.
less secure backing than a US dollar per se. And
Wow.
that becomes a more secure way for people to hold dollars in crypto.
I could
Because
see that because like Chainlink is an oracle, right? Like, or it's seeking to pull from an oracle, but like as we know, or maybe as you know, but maybe not everyone knows, when you go to like Coin Market Cap or you go to any of these and they're listing things in US dollars, they're actually basing this off the tether
yeah,
because of the data's there, right? And so if you have the USDC that's being the official peg, it could just swap that out, which could provide a more reliable crypto market at large.
absolutely. Because you don't have a scenario where FTX is trying to depeg USDT. You don't have a scenario where
Wow.
um, like MIM, Magic Internet Money, lost its
Yeah.
peg for a while back. I'd say a year ago because
Yeah.
when things came out about Time Wonderland, uh,
Yes.
because Magic Internet Money was originally created by the guy who created Time Wonderland.
Yeah.
And so you don't have these scenarios where your dollar might not be worth a dollar anymore, like the UST situation earlier this year with Terra. So
Interesting. So that is a view that I had not heard of. So what do you know, what if anything do you know about this test or this news headline that was released today? Do you have that in front of you, handy?
I haven't been able to find the headline, unfortunately.
Sure.
I
Sure.
mean, they're testing it. It's been something that's been in discussion for a while. Um, there we go. So it's a 12-week pilot program with their major banks. So BNY, Mellon, Citi, US Bank, and Wells Fargo.
And
And
this was go ahead. Go ahead.
so this was just released yesterday. And basically they're using tokens and settling transactions in a simulated environment.
Okay, so it's not user testing, it's just systems testing or
Yeah, systems
accounts
testing
testing.
with the banks, with banks, at least at this point.
Well, you know what's interesting about that? So ISO 20022 was slated to come out sometime for the US, was slated to come out sometime in November. And I remember this announcement. It's November 15th, 16th today, and there's no news. And I don't know if this is a low key thing or not, but what you're talking about, what people don't realize is for them to do Swift banking settlements, now it's the CBDC, so you don't necessarily need the for those who don't know, the ISO 20022 protocol is a messaging protocol for banking, and the upgrade allows for crypto to be earmarked for settlement, basically global international banking settlement. There's now like a definitions for crypto, and I assumed that that would happen first, and that would be the rails on which CBDCs would be allowed to have a transparent ledger that people could see. There's a question: is it your understanding that CBDCs have the same access to, I guess, ledger technology, or
From my understanding and from what I can see in the headline, yes, there would
interesting?
be there would be a ledger of at least a ledger of sorts that would be open. So
Interesting. That would be nuts if, because the accusation against the Federal Reserve is that it's a private institution. They make decisions on interest rates willy-nilly, right? And then money supply willy-nilly. And that's not necessarily the case. A lot of this stuff does happen behind closed doors, and we do hear about it maybe a day or so after the fact, which in banking years is enough to for them to get their initiatives done, and everyone else is left just like having to accept that. But for there to be a ledger, do you speculate that these ledgers will be like personal ledgers, or do you think there will be a macro ledger where the public can observe the behavior of money supply?
I think it'll be a macro ledger. And in my
Really?
speculation, it'll be a macro ledger to see movements of money supply. I don't think we'll see personal ledgers because I think that will violate privacy laws.
Sure.
And and so they probably won't allow, it probably won't be to at the single wallet level like we can see in crypto, but I
Yeah.
think at the macro banking level,
Interesting.
you could
Wow.
see money movements potentially.
Interesting. And then how long do you think it would take before a publicly ready CBDC to have this effect you're talking about in crypto, where like it swaps out stablecoins?
I'd say a year and a half.
Really?
That is my, because I mean they're talking a 12-week CBDC pilot test, and that was
Yeah.
released yesterday. So that puts us
3 months, yeah.
yeah, that's 3 months. So that puts us at least end of February 2023.
Yeah.
Knowing government and stuff, it'll take at least a few. You're talking at least a few months of reviewing data, understand how it works. Then probably a larger test outside of for a region for another 6 months,
Interesting.
and then so probably closer to a year and a half, 2 years, and then at that point you're looking at another 6 months for implementation, and then
Interesting.
release, and then people will be skeptical at first.
Yeah.
People are always skeptical, and then probably they'll be out 3 months, and it'll be like, okay, like, yeah, we'll try these out. We'll use them.
Now, what's your sense right now of, we talk everything is like US centric when we talk about this stuff, unfortunately. What is the sense of like, where is Canada at for CBDCs?
They've been exploring it. So they've been exploring CBDCs for a couple years now, at least. But I mean, I don't know if they're nearly as close in terms of they always tend to lag a little bit behind. So I'm not sure. I don't think we're as close
Hmm.
for a US for a Canadian version. I know China's testing one,
Oh,
India's
yeah.
testing one. I
I thought
think
China's was in full swing. I thought theirs was live.
I've heard mixed bags. I've heard from some people it's
Interesting.
fully live. In some place, I've heard it's fully live in all of China. I've heard it's live in part of China and in testing in other parts of China. I've heard
Interesting.
mixed stories there. Um, and then I know Argentina. I think Argentina is kind of like one of the bigger ones in South America that's been
Really?
interested in not only CBDC technology, but just crypto technology as a whole and crypto adoption as a whole.
Interesting. Okay, so back to FTX real quick. This has been a bloody week and a half across the market. What are your observations and takeaways? What are you predicting to happen next? I mean, I know we talk about more regulation, but like, are we going to see other crypto institutions get exposed here? Like, is there going to be more?
Gemini's, as of starting today, Gemini, there was some concerns about Gemini.
What?
A big lending platform has just announced that they've got to pause withdrawals. Let me find the
That
name
was
of them.
Gemini?
Well, Gemini is associated, is related, and yeah, they're talking about a bunch of other places starting to kind of break down. Like we're starting to see another round.
I mean, but like for these news headlines that you're talking about, well, no, I was going to say for that type of headline for Gemini to be kind of rocked as well. I would have expected Bitcoin to lose another percent or so, but it hasn't really shifted. I mean, the crypto market is still pretty stable around the $16,000 mark. I would have expected that to destabilize things further.
Well, there was a little bit of destabilization. If you look, like ETH is trading at, I trade a lot of ETH overall, less Bitcoin, but ETH dropped to just like 1186 earlier. It's trading around 1206 now.
I see
But
that, yeah.
this morning it was trading around 12, like all this morning yesterday it was trading around 1260. So like it's down 60, between 60 and $80
Yeah.
throughout the day.
On the 24-hour, it's down 3% or just over 3%, and Bitcoin's down 1%. But so you're seeing that Gemini's announcing there's some issues. Their lending platform, there might be some issues, but nothing definitive. So you're expecting a few other dominoes to fall?
Oh, absolutely. We saw BlockFi fall over the weekend.
Yeah.
BlockFi fell.
Jarrett lost is tied up, has money tied up there, yeah.
Yeah, that's Gemini. So BlockFi fell. So it's Genesis. Genesis is the crypto lending unit, which is, so it's Genesis Global Capital, and they had 2.8 billion in total active loans as of
Interesting.
end of the third quarter of this year. And they're saying they're having issues because of FTX. There
Interesting.
was a bunch of there's other names that are probably that haven't necessarily kind of come out saying, hey, we have, like, that are kind of potentially at risk. Like crypto.com was one. Like we're gonna see they're gonna get boosted a little bit because um, of the FIFA World Cup.
Oh, interesting.
They're associated with FIFA. The Crow coin will pump as a result. But there
Interesting.
are there's also a bunch of altcoins that have ties to Alameda Research and FTX that,
Okay.
as they go through their bankruptcy proceedings and go through all of that are going to have drops and falls because of FTX potentially having to liquidate that entire position to pay off debts.
So I'm blown away that what's being revealed is that for all the fancy tech, for all the promise of innovation in the crypto space, it's still just an over leveraged set of dominoes. I mean, like, is that all we're seeing? Like, that's it? Like, I wouldn't even call it. I mean, it is greed, and we know it's greed, but the promise is that it was. Let me ask you this. In hindsight, was it the promise that this is in your hands, it's more stable, so let's just overextend and let people have exorbitant loans? Like, are these exorbitant loans? Like in 2008, what was going on is there was a thing called no doc loans. And this is in the US anyway. They weren't even verifying that people had the income or the assets to cover their second and third mortgages. And so when when they couldn't afford to pay that third mortgage and they just let it slide, and then the second mortgage and they let that slide. The people that were allowing that to happen themselves were borrowed against these sorts of loans. And so when we talk about over leverage, it's like two layers of people who can't really afford the loan, but they're not asking. And so we're seeing that same practice here, it looks like. So, I mean, is there any disappointment here for you, or this was what you expected?
I'm a little bit disappointed just to see like FTX was a major player. They'd gotten to the
Huge.
point where they were second largest exchange by volume in
Yeah.
most of the world. So like to see that, it's kind of disappointing just for the crypto market as a whole, because I think I was starting to see like the bear market had looked like it was kind of evening out before this happened.
Yeah.
And there was a maturity coming back to the crypto market. Like it definitely felt like it was maturing as an industry and as a category. And then this scenario kind of just, and then they had the whole hack thing. Hack. It's not a hack.
Well, I mean, just wait till the truth comes out about some of this stuff. It's like, what in the world? This is that back door they're talking about. That
Yeah.
that's nuts. So, what does the future then? I mean, is this just yet another Wonderland time? Something fell for the crypto maxis. We're just going to endure it and take it on the chin, or does this change your game plans at all as it pertains to crypto?
I'm moving more and more away from centralized exchanges. A lot. I've got several strategies that I've been operating in the bear market, bot trading strategies
That's right.
of different kinds, that have mainly operated on centralized exchanges, grid trading, and all of that. But now more and more, I'm looking to move my strategies on chain fully. So not only are they operating in crypto, but they're operating on the blockchain rather than in a
Interesting.
centralized entity.
So, like, is this just like manual, time intensive trading? You do have your bot project you're working on, but what about your personal investment? Is that what you're referring to? The
Yeah,
bot
I'm talking
project?
about. I'm talking about my personal investments. I've got there's tons of different trading bot and like grid bot trading strategies, which basically just which automatically like trade. So it'll buy. I set up a grid, which is like a bunch of lines on a chart, and says buy ETH here, sell ETH here, and it automatically does this for you. And so
What platform do you use for this?
Binance, KuCoin, most centralized exchanges have it.
But what's the decentralized solution you're looking at?
So Alchemy Trades is they've
Interesting.
recently come out with this strategy for the decentralized space, and basically you buy a license for $500 and you can operate it off like either off your computer or off a virtual private network in the cloud, and it will conduct these actions that you preset for you.
But it's working directly with your on chain wallet, not a pseudo wallet at a centralized exchange.
Exactly.
That's now why wasn't this the default for this industry which claimed decentralization?
Because so Alchemy literally finished development. They're like in the DeFi space right now, especially,
Yeah.
and they only finished development 2 or 3 months ago. So they're a very fresh solution, and
Interesting.
we're seeing some dexes that are now starting to do leverage trading, GMX and DYDX, and we have been seeing a huge outflow to those. But GMX for a long time it's been a very like it's a newer decentralized exchange. There was a lot of there was still a lot of security concerns, and so but now
Yeah.
more and more people. I saw a Twitter chart showing the inflows into GMX in particular.
Okay.
Uh, the volume has doubled or tripled in the last week.
Wow. Yeah. That so So this is direct on chain. Is it mostly Ethereum?
Nope. Alchemy operates on all chains, so
Interesting.
they're chain agnostic. They actually promote using AVAX, Polygon, and BNB is their main ones because the gas fees are more reasonable.
Interesting. If you're allowed, and you could just turn this another direction if you're not allowed, but you're working on a bot trading project, and um, is that chain specific or is that chain agnostic?
Right now, we're mainly on centralized exchanges. We're working already on moving it off chain.
Sure.
We basically we were done. We just finished like last week or just before all the FTX disaster happened. We'd finished our 3 months of testing on
Yeah.
centralized exchanges,
Oh wow.
and we were like, okay, it's working. And so, but after this, we're releasing this version for investors, but we're gonna be looking at moving to see how we can operate it on
Yeah.
decentralized exchanges from here on out.
Now, from just a personal wealth strategy, like, I mean, I know that you're a developer. We're invested in Schedule.me. Have your hand in several projects that are really that's building, But from a crypto investment perspective, is your strategy more growth strategy, or is it like more trading, or what's your kind of philosophy just from wealth building as it pertains to crypto?
I'm looking towards growth. I have been doing trading, but I'm actually looking to automate my trading more and more.
Yeah.
Um, because the great thing about trading and bots especially, and so like you do need, like, there are cautions that need to be taken with bots and back testing and
Yeah.
um, seeing how a bot performs in an upward and a downward market.
Yeah.
But
Yes.
overall, I like that strategy because it has the ability, A, it works all the time, and B, it works in any market. So you can have a bot trading in an upward and a downward market and continuously making money. Whereas if you're buying and holding, you're going through the ups and downs of the market, and you can see your bag go from, if we were to think back to a week and a half ago, if you would have won Bitcoin, you could have had 16, 17,000 or even $20,000 and have it drop to $15,000 in the matter of a couple of days. So
Yeah.
whereas I could see in a trading scenario, I could see my bag go from $20,000 to $30,000 through a series of smart trades in that from a bot in that time frame.
How long have you been messing with bot trading?
Couple months, few months now.
Really? What is your like monthly net return or growth, positive or negative?
This month we're looking at 10 to 15%, but I had a bunch of strategies turned off. I turned off a bunch of my strategies
Interesting.
when the FTX disaster happened. When it started happening, I moved a bunch of funds off exchange and turned off my strategies. And so I saw that some of my strategies triggered some very good trades during the FTX disaster. I also saw them set off some really terrible trades during that
Yeah,
disaster. So, like, I'm happy, I'm okay with my decision, but yeah,
sure.
I can do 5 to 15%. It depends. Like 5% is like a grid bot strategy on a pretty conservative pair.
Yeah,
Um, Thinking Bitcoin, ETH, some of the altcoins, some major altcoins kind of thing.
yeah,
15%, 15 to I've seen a couple strategies that over a 3 month period can do over 150%. Those are more active, long and shorting with a little bit of leverage strategies on potentially sometimes on some pretty major pairs. A lot of one pairs on Matic that did 150% in 3 months. So it's kind of
interesting.
um, So there is some good options out there for
Yeah.
sure.
And are you a profit taker, or do you just hold because this is just something you're dabbling in while you're trying to just stack more crypto? Or do you do profit taking? Do you have a systematic profit taking?
I do. I'm starting to.
Yeah.
Um, I hadn't for the last 3 months. It was mainly building bags. I had my bags were okay. Like they weren't that big going
Sure.
into this bear market, and so it was mainly building. And now I'm starting to, in the next month or so, now that I've built a certain bag size that I'm kind of
Yeah.
happy with certain things, I'm starting to systematically take some profits out. Um,
Yeah.
I like operating on a monthly basis or bi-weekly basis. So because I want to take advantage of some of the benefits of compounding, but not go crazy with it.
Yeah. Yeah, man, that's interesting. Listening to Jarrett. Jarrett has very much a growth strategy, and he stacks, and I think he also stakes, which his money was in BlockFi with some staking. I have never had great returns on staking. I mean, even in the early days, you had these promises of APRs, and I'm on KuCoin mostly, and I think I've had some experiments running KuCoin, and I'd love to hear Jesse Eckel talk about this because he's run a lot of experiments. I was running experiments with my staking in KuCoin, and I'm telling you, in the last 12 months or more, it's probably approaching more than 12 months now. I'm not kidding about this. I've maybe made less than $50 in staking when, I've got plenty of ETH, and ETH is promising 8% annualized returns. I've got plenty of DAO Maker. DAO Maker promised 40% returns, and you're looking at this and you're going, okay, I know that there's transparency on the ledger, but these are centralized exchanges. And who is holding them accountable that are they making that much money and they're just paying me a small management fee, or are my contracts not fulfilling? Like, what is the game where I'm not seeing any, like, this money would have been better spent? And me and Marissa were looking at this today. We were looking at a dividend, a TradFi dividend portfolio that every quarter it has a bag of people that are paying off dividends each quarter. So in Q1, this company, this company, this company, this company, this company pays out dividends and has for the last 20 years. And then the same for Q3, Q2, Q4. And I literally was doing some rough napkin math. And I was like, this same amount of money in dividends would have grown more and cash flowed more. And I on the long term, I'm bullish on crypto, but I I'm really bullish on financial freedom. and
I'm the
and as
same way.
what is
Same way.
how so? What do you mean?
I'm I'm bullish on crypto, but I don't think crypto is the end all and be all of financial freedom.
Well, no, and I think the Wild West window is closing. And the Wild West window, and like, volatility brings riches, right? Like, and I think that but volatility also scares retail people or late adopters, right? And now we're getting into the adoption phase. And all the early adopters and all the innovators have either made money or lost money. They played in the space of the Wild West. And, it's just time. It's time for this stuff to level off. And
I don't agree though. So
tell
I
me,
don't. So I don't think the Wild West is completely done, and I don't think the volatility is ever gonna be fully gone. I'm looking at ETH, and I'm running a bunch of my pairs on ETH on inverted pairs. So I take profit in ETH, not in
okay,
USDT, in ETH. ETH is right now $1,208. ETH will be 10,000 before 2025.
you think so?
ETH will be $10,000 before 2025.
Now, this is interesting to hear. Why? What is your justification for your prediction?
ETH has gone majorly deflationary at this point.
Yes. Yeah. Yeah. Like
That
negative. Yeah.
like negative, like
Hmm.
burned over 600 some odd thousand ETH.
Yeah. I saw some of those numbers.
Yeah, we're starting to see major adoption use cases for ETH and for Matic and ETH primarily. Those are like the two that we've been seeing. JP Morgan's doing transactions with ETH and Matic.
Interesting.
Starbucks is using looking to use Matic and Polygon as for um, their rewards card.
Yes.
And so we're seeing the use of the technology be adopted in major places. And there, even though there's major adoption, it doesn't mean that it won't take away the volatility. I think 2030 is when we start seeing it really levels off, because by 2030 the mining of Bitcoin and the value of Bitcoin, I think, will be surpassed by ETH. Like the
Wait,
total.
break that down. What? Why do you think that? I mean, I know we're not mining ETH, but like, could you say that same thing another way?
So I think that because the rewards coming from the mining of Bitcoin are going to have a smaller and smaller impact on the volatility of Bitcoin because they're smaller. Like there's going to be less rewards for Bitcoin overall. And in that same way, ETH is going to be having more and more adoption, which is going to add more and more deflationary aspects to ETH, which is going to cause its market cap and the total value and its total influence on crypto to be much higher, because a lot of the major level like layer twos like Matic, ZK Sync, a whole bunch of Arbitrum are all going to be running on ETH, and therefore everything the crypto world is going to be running on ETH, and so ETH will be dictating the market, not Bitcoin anymore.
Interesting. So Bitcoin maxis love to talk about the limited supply of Bitcoin and the halving. And I do believe that predictability of supply is important to note. But the predictability of demand is still very difficult, and you've adjusted my view a little bit on how CBDCs might affect it. I half believe that CBDCs will decrease the demand of Bitcoin, because if Bitcoin is digital gold, which is interesting. Now, maybe CBDCs, because they will continue to have the volatility of the US dollar, that won't go away. It will still be a volatile currency because supply and demand will still be played with by the central government and the central bank. And Bitcoin might still be, maybe we'll understand Bitcoin as digital gold a bit more because of the fixed supply. And a lot of Bitcoin maxis say, well, no, institutional adoption will continue to increase. Maybe that's true. But I think about real estate quite a bit as an investment. And I think, I'll tell you what, right now, it's not unpredictable knowing supply and demand of real estate,
Yeah.
because the population of the world is growing. We have very detailed numbers about available housing and the gap between available housing and the people who are of home ownership age looking for homeowner. It's very predictable, and that is going to continue. So if supply and demand were the only thing, we would ditch and go to real estate. And then you hear people say, well, if I held a piece of real estate from 2008 till today, you might have seen equity growth, but you can't pull that money out, because where would you go put that money next? And so you're like, well, okay, so there's problems there. But similarly, my crypto that I bought last year is not further ahead, and I'm not getting the cash flows.
No, and see that's the problem. So I think the problem is like we've been talking for a year, you and I, like, to
Yeah.
think about this. We've been buddies for a year, but
Yeah.
when we were talking a year ago, when you bought that ETH,
Yeah.
ETH was at the top of the market. We were at the
Yeah.
top of a bull market. We were at the top of the biggest bull market that we've seen up to date.
Yeah.
If we were having this conversation now, looking next year, your growth potential will be, I'm, and this is speculation, but I assume we see ETH probably at least 2x or 3x its current value by this time next year, at least.
I could see that because if Bitcoin if Bitcoin is digital gold, there is to me there's a slowing of its demand, and though its demand could be a certain trajectory, so institutions start buying it up. And technically, there are protocols to do programming and use the Lightning Network and stuff for different programming, but that is literally what ETH is doing. And I think it was Ken Cato who recently posted who's building in the down market, and it featured an interesting graphic of the number of developers still active on each of the networks, and all the networks had tanked except Hedera Hashgraph, but Ethereum still had a huge number of developers, and so
Oh, you just froze.
I do. There we go. Sorry, am I back?
Yeah, now you're back.
Sorry about that. So it takes a lot.
Oh, you're freezing back up. We'll give you a second for your internet to stabilize.
Less inertia for Ethereum. Are we there?
Okay, you're starting to come back. I'm giving you a second to stabilize. Okay, I think you're
Sorry
back.
about that. Thanks for your patience there. All I was saying is that it takes a lot less juice, a lot less inertia for Ethereum to start hitting a 2x than it would take Bitcoin to hit a 2x. And I think the demand for Ethereum, there is some institutional demand to hold some Ethereum because they're speculating, but there's even more predictable. So it has that just like Bitcoin has that. But then on top of that, it has the developer needs. And on top of that, it is deflationary. Not only is Bitcoin a predictable supply, but it is still not necessarily deflationary. It's not inflationary, but it's not deflationary either. But Ethereum has that feature. And I think it was last week was the first week we saw the net. Like we've seen the mining stop, but it fell below the demand or what was the line? It fell below some line of net Ethereum on the market available was negative for the first time. And that is when we start getting excited because demand is increasing as fast, if not faster, than something like Bitcoin. And developers need Ethereum to be running their show. The Ethereum Foundation is still making good returns on its transaction fees. So they're still developing rapidly. And on top of that, we have a burn mechanism. So I think you're right. I don't know if I agree with the exact numbers, but in principle, I completely agree that I think but why 2030? Like, is that who are you listening to, or what references are you kind of pulling from to come up with a 2030 number?
Two numbers. So 2024 is the next Bitcoin halving. 2028 is the one after that. So for me, Bitcoin 2024, we're looking at 100,000 probably. I think we'll probably come just shy of 100,000 as the all-time high in 2025 because it takes a halving and then 6 months to a year and a half to hit all-time highs again. So we're looking 2025, 2026. That will kind of cement, okay, that's the market where ETH is going to start taking over. We're going to, because at that point, right now the overall US market is too weak. We're in a global recession. There's not enough market to really drive everything. People will probably start being into risk on assets, especially crypto, especially if you're big on crypto. But because of the whole recession and the US market being kind of weak, adoption might be a little bit slower. Like there's going to be some barriers to adoption.
Interesting.
And then we're going to see, and because I think Bitcoin will still fall, Bitcoin will still probably hold enough influence, enough sway in 2025, 2026. We'll still see that cyclical pull down in the market that we've just experienced this last year. And then we'll go into that next bull market with the halving in 2028. Halving in 2028, bull market hitting 2029, 2030. And at that point, ETH and everything will have so much adoption, because at that point, ETH in 2030, ETH will be over 10 years old.
Yeah.
ETH will be, so that's one of the arguments right now for Bitcoin, is Bitcoin's 13 some odd years old. It just celebrated its 13th birthday at Halloween. So ETH will be at least 10 years old. So people will say, okay, it's a little bit more of a mature asset. It's shown a predictable pattern. There's adoption for it. It'll have you'll have sharding at that point. Like sharding will definitely be a thing at that point on ETH. You'll have all of these layer 2s that will help create interoperability and really build that network up to that point.
Yeah.
And so at that point, institutional investors will feel that much more confident in ETH, and ETH will kind of become that driver in the market. It will kind of be
interesting.
It'll be like, okay, it's mature, it's shown predictability, it's got use case, it's deflationary, it's got sharding. Everyone, like it is the mainframe of the internet, of the cryptocurrency internet kind of thing.
That's interesting. And I'll be interested. I mean, there's a lot of developments coming out of Matic. Matic is technically a layer 0, and it technically is, but it has also played so nicely as a layer 2. And it's got a lot going for it. And its team just brings out the hits. And suddenly, like you said, they announced the Starbucks announcement and many others of late. So I also think they have a strong future. But you make a real strong case. I'm going to have to look at my portfolio again, because I haven't been looking that far ahead, in all honesty, because when I look that far ahead, I'm often looking at real estate. I'm looking at cash flow. And I need to be looking that far ahead because I'm not a growth guy. I have real estate and I just assume that I'm going to be getting equity, but that's not my play. My play is cash flow. And so, but these moves you're talking about, the potential for growth, you're right, is still kind of once in a lifetime. And your pushback on me is I would agree now, well warranted, that the Wild West version of crypto still is not complete. And so I'll have to ponder that, man. I really appreciate that.
Yeah, I mean, if you want, my growth plan is growth through crypto, but cash flow through real estate. Like I don't own any real estate right now.
Sure.
And because my crypto bag is still small, but my whole plan is I still think I've got most of 2023 and a portion of 2024 to build up enough of a bag over that time frame to then really take advantage in the second half of 2024 and into 2025. And that's the play, is take advantage of 2024 and 2025. That's where you take that growth aspect and really hit it home. Because then you, at that point, ETH that you're buying now is worth 10 times what it is in a matter of a couple of years. And at that point, in a couple of years, then you're really talking, well, if I even have 3 ETH, you're talking at least a down payment. You're able to make a down payment on another property potentially.
Oh yeah.
With 3 ETH, which is $3,600 right now.
That's good. I appreciate that. Well, I've got to transition. So thank you for being on. Stick around real quick. Folks, check out Austin. Check out schedule.me, a project he's been working on that helps make Discord sane. And then is the bot available for the public to check out yet or no?
You can check out our podcast, which is Universal Crypto, and our new channel that'll be up later today, Universal Crypto News. And then there you can find our Discord where you can find we're starting to have those public discussions about the trading bot. So you can check us
Very
out there.
cool. Well, thanks for being here, folks. Have a great afternoon. Thanks for stopping by.